Is the cryptocurrency market a goldmine or a ticking time bomb? That's the question on everyone's mind, isn't it? Now, let's not beat around the bush. Cryptocurrency is a hot topic, a buzzword that's been making waves in the financial world and beyond. You see, cryptocurrencies, digital or virtual currencies that use cryptography for security, are infamous for their volatility. One day they're up in the clouds and the next they've plunged into the abyss. But it's this very volatility that makes them so tantalizing, so irresistible. The potential for high returns is there, but so is the risk of dramatic losses. It's a bit like playing a high-stakes game of poker, isn't it? Now let's address the elephant in the room. The controversy. Yes, cryptocurrencies are mired in controversy. Some see them as the future of finance, a revolutionary tool that will democratize the financial world, making transactions quicker, cheaper, and more secure. Others, however, view them with skepticism, seeing them as a speculative bubble, a risky investment that's more about hype than substance. And then there are the regulatory concerns. As cryptocurrencies grow in popularity, they're coming under increasing scrutiny from governments and financial institutions worldwide. There are worries about money laundering, tax evasion, and other illegal activities. But on the flip side, there's the argument that regulation could provide legitimacy, fostering trust and wider adoption of cryptocurrencies. In the midst of all this, there's a flurry of activity in the crypto market. New coins are being launched, initial coin offerings or ICOs are taking place, and big players are making moves. It's a dynamic, fast-paced world where fortunes can be made and lost in the blink of an eye. So is the cryptocurrency market a goldmine or a ticking time bomb? Well, perhaps it's a bit of both. It's a high-risk, high-reward game, filled with opportunities and pitfalls. But one thing's for sure, it's a game that's worth keeping an eye on. Let's dive into the recent market movements and see what they reveal. The crypto market never sleeps, and neither does its volatility. That's the thrilling, if not somewhat nerve-wracking, reality of this digital frontier. Let's take a look at some recent significant market movements. The giants of the crypto world, Bitcoin and Ethereum, have been on quite the roller coaster ride. Bitcoin, the granddaddy of them all, has seen its value fluctuate wildly, with highs that make headlines and lows that leave investors biting their nails. Ethereum, the second largest cryptocurrency by market cap, hasn't been left behind either. It's given us a fair share of heart-stopping moments with its own peaks and troughs. But what's causing these dramatic swings? Well, there are several factors at play. One of the biggest is investor sentiment. Cryptocurrency in general is a highly speculative market, and the mood of the investors can have a significant impact. Positive sentiment, driven by factors like technological advancements, successful adoption cases, or even celebrity endorsements, can send prices soaring. Conversely, negative sentiment, perhaps triggered by regulatory concerns or major security breaches, can send them plummeting. Market trends also play a crucial role. For instance, the broader economic environment has a symbiotic relationship with the crypto market. Traditional markets can influence crypto prices and vice versa. If the stock market is bullish, it often spills over into the crypto world, encouraging investors to take risks. On the other hand, if traditional markets are bearish, it can cause a ripple effect leading to a sell-off in cryptocurrencies. Then there are global events. The crypto market doesn't exist in a vacuum. It's affected by everything happening around the world. Political instability, economic crises, or even major technological breakthroughs can all have a profound impact on the price of cryptocurrencies. For example, when a country experiences hyperinflation, its citizens often turn to cryptocurrencies as a safe haven, pushing up demand and consequently prices. But it's not just the big players that are making moves. There are over 7,000 cryptocurrencies out there, each with their own unique selling points and potential pitfalls. Altcoins, or alternative cryptocurrencies, can experience significant price movements too. They may not have the same market cap as Bitcoin or Ethereum, but they have proven time and again that they can deliver impressive returns and losses. So, what's the takeaway from all this? Well, if there's one thing we can say with certainty about the crypto market, it's that it's anything but predictable. It's a dynamic, ever-changing landscape driven by a host of factors that can shift the balance in an instant. It's an exhilarating space to be in, but it's not for the faint-hearted. These movements are a testament to the dynamic nature of the crypto market. The highs can be exhilarating, the lows can be nerve-wracking, but one thing's for sure, it's never ever boring. While the crypto market moves, regulators are not far behind. Now let's turn our attention to the recent regulatory developments in major markets like the United States, the European Union, and Asia. These changes are shaping the future of cryptocurrency, and it's crucial to keep an eye on them. Starting with the United States, regulators have been busy. The Securities and Exchange Commission, or SEC, has been particularly active, scrutinizing a number of initial coin offerings, or ICOs. The SEC has made it clear that they view many ICOs as securities, which means they fall under their jurisdiction. This could mean more oversight and potentially more protection for investors, but it could also mean more hoops for companies to jump through. Moving across the pond to the European Union, the situation is a bit different. The EU has taken a more hands-off approach, opting for a wait-and-see strategy. They've expressed the need for careful regulation to prevent money laundering and other illegal activities, but they've also acknowledged the potential benefits of cryptocurrencies and blockchain technology. This balancing act between regulation and innovation is a common theme in the EU's approach. Finally, in Asia, the picture is quite varied. Some countries like China have imposed strict regulations on cryptocurrencies, even banning ICOs altogether. On the other hand, countries like Japan have been more welcoming, officially recognizing Bitcoin as a form of payment. So, what do these regulatory developments mean for the future of cryptocurrency? Well, it's a bit of a mixed bag. On one hand, regulation can provide stability and protect investors from scams and market manipulation. This could help cryptocurrencies gain more mainstream acceptance. On the other hand, too much regulation could stifle innovation. Cryptocurrencies and blockchain technology are still in their infancy, and over-regulation could prevent new and exciting developments from taking off. Regulation is a double-edged sword, providing stability but potentially stifling innovation. So, as we continue to navigate the ever-evolving world of cryptocurrency, it's essential to keep an eye on these regulatory developments. They will play a significant role in shaping the future of this exciting space. In the crypto world, new tokens are born every day through initial coin offerings. Let's take a moment to shine our spotlight on these ICOs, or initial coin offerings. They're a bit like the Wild West of the crypto world, where everything is new, unexplored, and not without a fair share of dangers. In essence, an ICO is a type of crowdfunding used by startups to bypass the rigorous and regulated capital raising process required by venture capitalists or banks. In an ICO campaign, a percentage of the cryptocurrency is sold to early backers of the project, in exchange for legal tender or other cryptocurrencies, usually Bitcoin or Ethereum. Now let's take a glance at some recent ICOs. First up, we have an example of a promising ICO in the form of Token A. This project aims to revolutionize the e-commerce sector by integrating blockchain technology for secure and transparent transactions. It's a lofty goal, and if it succeeds, it could change the way we shop online, but as with any ICO, it's not without its risks. The team behind it is relatively unknown, and the project is still in its early stages. There's potential, yes, but it's a gamble. Next, we have Token B. This one has been making waves for its ambitious goal to create a decentralized social media platform. It's an appealing concept, especially in a world increasingly concerned with data privacy. But again, the risks are there. They're up against some established giants in the social media space, and breaking into that market is no small feat. And finally, we have Token C. This ICO is all about creating a new kind of digital asset exchange. The team behind it has some serious experience in the financial sector, which gives it a degree of credibility. But remember, even with a strong team, the success of an ICO is never a sure thing. These examples illustrate the potential of ICOs. They're a chance for innovative ideas to get the funding they need to become reality. But it's important to remember that for every success story, there are countless others that didn't make it. Investing in an ICO isn't like buying a lottery ticket. It requires a deep understanding of the project, the team behind it, and the market it's entering. The risks are substantial, Many ICOs are built on nothing more than a white paper and a dream, and even when an ICO does have a solid foundation, there's always the chance that it won't take off. The regulatory landscape is also a minefield, with different jurisdictions imposing different rules. So as we delve into the world of ICOs, it's crucial to approach with caution. Do your research, understand the risks, and never invest more than you're willing to lose. ICOs can be a gateway to exponential returns, but they come with their own set of risks. So, where does all this leave us in terms of the future of cryptocurrency? As we ponder this question, it is essential to remember that the crypto market, like any other market, is influenced by a multitude of factors. These include technological advancements, regulatory developments, and the sentiment of investors. Recent developments suggest an exciting future for cryptocurrencies. The integration of blockchain technologies into diverse sectors such as finance, healthcare, and even art through non-fungible tokens indicates a growing acceptance and normalization of crypto in our daily lives. On the other hand, the increasing interest of institutional investors in cryptocurrencies is another sign of the bright future ahead. As big players like hedge funds and pension funds begin to dip their toes into the crypto pool, the market is poised for a surge in liquidity and stability. In the world of technology, the advent of quantum computing could potentially revolutionize the crypto industry. This could lead to faster transaction times, increased security, and the advent of new, more sophisticated cryptocurrencies. From a regulatory perspective, the future might seem a bit murky. However, a closer look reveals a silver lining. Yes, regulatory bodies around the world are tightening their grip on the crypto market, but this is not necessarily a bad thing. Clear regulations will help weed out fraudulent practices and protect investors, leading to a more robust and trustworthy crypto market. Expert predictions for the future of crypto are as varied as the cryptocurrencies themselves. Some believe that crypto will replace traditional fiat currencies and become the primary medium of exchange, while others predict that crypto will coexist with fiat currencies, each serving their unique purposes. The potential of cryptocurrencies is vast, and the possibilities are virtually endless. We could see a world where blockchain technology underpins major sectors of the economy, where crypto tokens are the norm, and where digital wallets replace physical ones. Yet despite all these exciting possibilities, there's one thing we must remember. The future of crypto is as unpredictable as its market movements. The key is to stay informed, stay resilient, and most importantly, stay excited about the incredible journey that lies ahead. Cryptocurrency is a complex, volatile, yet exciting market. We've taken you on a journey through the intricate labyrinth of this digital currency world. We've delved into the recent market movements, where we've seen prices fluctuate with the unpredictability of a stormy sea, yet amidst the chaos, there's a captivating rhythm to the ebb and flow of cryptocurrency. We've also navigated the regulatory developments, a landscape continually shifting under the weight of new rules and regulations. It's a maze of legalities, but it's a necessary one, ensuring the safety and legitimacy of this virtual financial sphere. Our journey took us to the frontier of initial coin offerings, where new tokens are born. We explored their potential, their risks, their promise. Finally, we peered into the crystal ball of future trends, a realm of possibilities that could reshape the financial world as we know it. Hit that like button, subscribe for exclusive updates, and stay in the loop on the groundbreaking developments that Bitcoin Platinum is set to unveil. Don't miss out on the future. Be a part of it. Smash that like, subscribe, and let's journey into the exciting world of Bitcoin Platinum together.